For a finance shared services center to be an enabler of the enterprise-wide strategy, it is extremely important for the shared services to have complete visibility to the enterprise-wide processes to the extent they pertain to the CFO's world. So, shared services organization should be leveraged across the 4 domains within the CFO's world, whether it is source to pay, order to cash, record to report, and decision support activities. If you look at global organizations who have mature shared services footprint, you will see that they leverage shared services organizations way beyond routine, mundane operational activities like accounts payable processing, accounts receivable management, and things like bank reconciliation. Today, shared services organizations deliver services which are much more strategic, services that go up the value chain, things like month-end closing, statutory reporting, tax compliance, regulatory compliance, so on and so forth. So very simple, you've got to give your shared services organization complete visibility and end-to-end accountability of managing processes. So efficiency and effectiveness are the 2 key parameters that every shared services organization has to try to improve upon year by year. Let's talk about efficiency first. Efficiency, to my mind, is a productivity metric. It's all about increasing the number of transactions that get processed by per person per month. It's all about throughput. It's all about increasing the productivity of your employees, reducing the cost per transaction. When you're tracking efficiency, you're tracking turnaround time. So that's all about improving productivity. If you talk about effectiveness is all about impacting business outcomes. How can you help your organization reduce cost of capital? How can you help reduce payment fraud? How can you help reduce the days sales outstanding? So effectiveness and efficiency are 2 critical matrix that needs to be tracked every year. So best practices and technology are again 2 very important levers that a shared services organization has to improve its effectiveness and efficiency quotient. Let's talk about technology first. Technology is important. Technology-led automation is important because it helps you to reduce your dependence on the people factor. It helps you to scale. If your business is going to double in 3 years, as the CFO, you definitely do not want to see your finance back office team double in size as well. So technology helps you to scale. Technology also helps you to iron out manual errand-prone processes. Technology will also help you to improve controls and also improve audit trail within your environment. So technology is extremely important. Talking about best practices and process excellence, it should be the endeavor of every shared services organization to benchmark their processes with the best within their peer group. And best practices are important because, and process excellence is important because when you depend on processes, you are again eliminating your dependence on people. The situation where there is process excellence, those situations, those environments will typically imply better controls, improved audit trail. It also results into fewer handoffs, better control over exceptions, better process documentation, so on and so forth. So best practices and technology automation are 2 very important levers that every shared services organization must make full use of. If you look at the shared services environment, every shared services professional is challenged with delivering more with less. That's a constant struggle one has to face day in and day out. Basically, you are expected to deliver higher productivity, better quality, reduced turnaround time with fewer resources and many such constraints. The only way you can meet the expectations of your internal customers is by embarking on a program around continuous process improvements. What you really need to do is embed the culture of Six Sigma, Lean, and Kaizen within the DNA of your organization. Every shared services organization must invest in resources that can implement these Six Sigma initiatives across your operational processes. When you implement these initiatives like Six Sigma, Lean, and Kaizen, you're basically eliminating process redundancies, you're eliminating wastage, and you're making sure that on the process maturity curve, you are as world-class as possible.